Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets that corporate filings are trying to keep hidden. And today we're diving into United Acquisition Corp, I's latest report, which is a bit of a mix. Grab your popcorn because we're about to unpack some interesting moves in the world of SPACs. And trust me, it is not as dry as it sounds. If you are trying to make sense of this financial maze and want to stay ahead of the curve, make sure you are subscribed to the channel. And hey, we've got a great community over on Discord where we break down these filings even more. The link is in the description below. Let's jump in. So what we're looking at here is a Form 8K filing from United Acquisition Corp. I often called UAC, think of an 8K as a company's way of telling the public about big news that isn't part of its regular scheduled reports. It is like getting an urgent update. This particular filing is reporting on events from the 12th of February 2026. United Acquisition Corp, or UAC, is a special type of company called a SPAC. That stands for Special Purpose Acquisition Company. Basically, it is a company with no actual business operations. Its sole purpose is to raise money from investors through an initial public offering, or IPO, and then use that money to buy or merge with an existing private company. It is like a blank check to go shopping for a company to take public. UAC has its roots in the Cayman Islands, and it is listed on the NYSE American Exchange. Now let's talk about what UAC is actually selling. They offer units, which are bundles. Each unit is made up of one Class A ordinary share and a quarter of one redeemable warrant. A warrant is like an option to buy a share later at a set price, so you are buying a piece of a share and a little something extra that could be worth more later. They also trade the Class A ordinary shares separately and the warrants separately. These are all listed on the NYSE American, which is a pretty decent exchange. This part is where things get a little nuanced. The company is talking about issuing more private placement units and private placement warrants. Now, private placement means these aren't being offered to everyone on the public market. They're sold directly to specific investors, often insiders or strategic partners. The key here is that these are exempt from registration under Section 4, Act 2 of the Securities Act of 1933. In plain English, they are not required to go through the full public registration process for these specific sales, because they believe they are being sold to sophisticated investors who don't need the full protection of public registration. It is a way for companies to raise capital quickly, without the extensive regulatory hurdles of a public offering. This is where the core story of this filing lies. On the 30th of January 2026, UAC completed its initial public offering, selling 10 million units at $10 each, bringing in a cool $100 million. They also gave the underwriters, the banks that helped them sell the shares, an option to buy an additional 1.5 million units if needed. And guess what? On the 12th of February 2026, the underwriters partially exercised that option, buying an extra 182,300 units. This extra unit sale raised more money and increased the total number of units issued. Simultaneously with that initial IPO, UAC also did some private placements. They sold 175,000 units to their sponsor. That is typically the founding group of the SPAC, and 100,000 units to the underwriters. They also sold over 2.3 million warrants to the sponsor. The total for this initial private placement was $4.5 million. Then, on the 12th of February, going along with the extra units sold to the public, they did another private placement. This involves selling an additional 2,280 private placement units and 6,060 private placement warrants. This smaller additional private placement brought in another $27,345. Think of it as the sponsor and underwriters getting a small piece of the action tied to the allotment. Now, where did all this money go? A significant chunk, over $101 million, was placed in a trust account. This is standard for SPACs. This money is essentially held aside to fund the future acquisition or merger. It is the war chest that the SPAC has to make its big move. They also mentioned that an unaudited pro forma balance sheet will be filed soon. This will give a snapshot of the company's financial health right after these recent transactions. Here is a bit of news for investors who hold these units. Starting the 18th of February 2026, people holding the company's units can choose to separate them. This means they can trade the Class A ordinary shares and the warrants as separate investments. The units will keep trading under the symbol URQ, and the individual shares and warrants will get their own ticker symbols, URC for the shares and UICW for the warrants, all on the NYSE American. This gives investors more flexibility in how they hold or trade their positions. This section is basically the table of contents for the extra documents attached to this report. We've got Exhibit 99.1, which is the press release dated the 12th of February 2026, announcing these events, and then the cover page interactive data file, which is a standard requirement for these filings. And finally, we have the signature. Paul Packer, the Chief Executive Officer, signed off on this report on the 13th of February 2026. This confirms that the information provided is accurate to the best of his knowledge. So, what is the big picture here? United Accession Corp is actively working towards its goal of acquiring another company. They've successfully completed their IPO and are now processing the buy-ins related to the underwriter's allotment option, including some follow-on private placements. The money is largely secured in a trust account ready for deployment. The ability for unit holders to separate their shares and warrants offers more trading flexibility. What is the story? It is a story of a SPAC moving through its life cycle. They've raised capital. Now they need to find a target company to merge with. The recent stock and warrant issuances show continued activity and potential confidence from those involved, like the sponsor and underwriters. However, it is crucial to remember that the real value of UAC will be determined by the quality of the company it eventually acquires. Without a target company, the SPAC itself has no intrinsic business value. The increased trading flexibility with separate share and warrant tickers is a good sign for liquidity and investor choice. Risks for UAC are inherent in the SPAC structure. The biggest risk is failing to find a suitable acquisition target within the allotted timeframe. If they don't find a deal, the money in trust is typically returned to shareholders, and the SPAC essentially disappears. Another risk is the valuation of the target company. If they overpay for a merger, it can significantly harm shareholder returns. Opportunities lie in identifying a strong undervalued company that can benefit from being publicly listed through UAC. In conclusion, United Accession Corp is on track with its SPAC process. They've executed their IPO and are managing the logistics of over-allotment exercises and related private placements. The stage is set for them to find and merge with a target company. We'll be watching closely to see what kind of business they decide to bring public. Alright, that is our breakdown of United Accession Corp's latest filing. What is your take on these SPAC maneuvers and what they might signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and make sure you subscribe for more deep dives into the corporate world. And don't forget to check out our Discord community in the description. It is a great place to keep the conversation going. Thanks for watching, and we'll see you next time on Corporate Decoder.